Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business, and sometimes it feels like they're trying to speak in riddles, but not here, not on this channel. So, Silexion Therapeutics is back with a pretty interesting update, and let me tell you, they've been busy making some significant changes. In short, Silexion Therapeutics, Corp has done a reverse stock split, a 1-for-15 reverse split to be exact. This means for every 15 shares you owned before, you now own just one. They did this to make their stock price look a bit more respectable on the stock market. Plus, they've updated their financial reports to reflect this change. This is actually a pretty big deal for investors. If you own Silexion stock, you'll notice your share count has dramatically decreased, but hopefully the price per share has gone up proportionally. It's like trading in 15 pennies for a single dime. The goal here is often to get the stock price above a certain threshold, especially for listing requirements on major exchanges like the Nasdaq, where Silexion's ordinary shares and their warrants are traded. This reverse split was approved by their shareholders and took effect on July 28th. 2025. The trading on this new adjusted basis started right at the end of July. It's a move companies often make when their stock price has fallen quite a bit. It doesn't magically make the company worth more, but it can make it more attractive to certain investors who might avoid stocks trading too low. Now they've also retroactively adjusted their financial statements for the year ending December 31st, 2024 to show everything as if the reverse split had already happened. This is standard practice to keep the numbers comparable and clear, so you'll see their past results presented with the new share structure. They're essentially saying this is what our books look like now with the new share count in mind. It helps avoid confusion when you're looking at their financial health. Let's try and dig into what these updated financials might be showing us, even though the filing itself mainly points to Exhibit 99.1, which contains the actual financial statements. And we can't see those numbers directly here. Knowing about the reverse split gives us some clues. Companies that do reverse splits are often trying to boost their stock price. This usually happens when the prices dip due to performance issues, market sentiment, or sometimes when they are facing delisting warnings from the stock exchange. The fact that Silexion has shareholders backing this move is important. It means the management sees this as a necessary step for the company's future on the public market. However, the real question for any investor is what's behind this. Is it a strategic move to attract new investment, or is it more of a cosmetic fix for a company that's struggling? Without seeing the actual numbers, it's hard to say definitively. One thing to note is that Silexion identifies as an emerging growth company. This means they have more flexibility with reporting standards compared to larger, more established companies. They're also checking this box, meaning they haven't opted out of using extended transition periods for new or revised financial accounting standards. This usually means they're taking advantage of the ability to delay adopting certain new accounting rules, which can sometimes make comparisons to other companies a bit trickier. It suggests they might be a younger company still finding its financial footing and leveraging regulatory allowances. The report is signed by Ilan Hadar, the Chief Executive Officer. This tells us management is aware and orchestrating these financial adjustments. As CEO, Hadar is steering the ship, and this reverse split is one of the major maneuvers he's approved. It signals his focus on the company's public market image and compliance. So what's our take on all this? This reverse stock split is a significant event for Silexion. It speaks to their current situation on the stock market. While it's a move to improve their stock's presentation and potentially meet listing requirements, it doesn't inherently fix any underlying business problems. What we really need to focus on moving forward are the actual financial results that these reports are based on. The success of this split will hinge on whether Silexion can deliver strong performance that justifies a higher share price, or if it's just a temporary coat of paint on a business that needs more fundamental repairs. We'll be keeping a close eye on Silexion's future filings to see if this move is accompanied by solid operational growth and increased profitability. Without that, a higher stock price achieved through a reverse split is just an illusion. Alright, that's our breakdown of Silexion's latest filing. What's your take on these numbers and what they signal for the company's future? Do you think this reverse split is a smart move or a sign of trouble? Drop your thoughts in the comments below. And if this analysis was valuable to you, please hit that like button. It really helps us out, and subscribe for more deep dives into the world of corporate finance. Don't forget to join our Discord community linked in the description for even more discussions and insights. Thanks for watching, and we'll see you next time on Corporate Decode into the world of corporate finance. Don't forget to join our Discord community linked in the description for even more discussions and insights. Thanks for watching, and we'll see you next time on Corporate Decoder.